The morning report for 9th of August 2011. As most people would be waking up the news this morning, you see that the Nasdaq and the S&P 500 have tumbled almost 7% last night. The Dow Jones was down 5.5%, but even around the world, the FTSE was down 3.3%, the Nikkei was down 2%. Our markets lost just under 3% yesterday. That's the All Lord sitting around 4,057, while the ASX 200 is below the 4,000 mark, back in the 3,986, and the SPY index is pointing to another 4% drop today. That'll bring it back into around the 3,800 level. So the market has been hit fairly hard, and then obviously this is concerns on the investor debt overseas in the US, government debt, chance of the economy will slide into another recession in the US. Let's look like at home at present about recessions. Technically a recession is 2 negative quarters of GDP growth. Now last quarter was negative, and the way this one's shaping up, it possibly will be negative again. So technically, I guess we probably are in a recession. But for my money, I generally look at a recession as in standard of living. Has your standard of living increased or decreased over the last 12, 18 months, 2 years? I think most people in Australia probably agree that standard of living hasn't definitely not increased and possibly stayed steady or has decreased slightly. Now the carbon tax coming in the next 12 months, we'll probably see a standard of living drop again. So I think a recession is certainly on the cards, and our technical analyst Daniel Goulding's been picking that now for quite some time. But that doesn't mean you get out of the market, and it certainly doesn't mean that big companies such as Woolworths, BHP, ANZ, NAB, Wesfarmers, these companies, QBE, will still be very profitable going forward, and that's where your money needs to be invested. And obviously you need to be picking up those dividends along the way. Yes, granted, we may not see these value of these companies jump in the short term. The next 2 or 3 years it may be pretty stable, but you can get a very good yield and a very good return on these investments and these businesses. They're still in the same old thing. I mean, the market's dropped around about, be around about 10% now after today over the last 3 days, but Woolworths stores are still open. People are still buying food, fuel, alcohol from the store, so the money is still being made. These businesses are still rock solid. So for us, we'll be looking to pick up some bargains around these prices, and certainly keeping in the market and buying good quality stocks. Keep in mind that you make money on anything when you buy it. You make money on property by buying at the right price. You make money on shares by buying at the right price. Will the market stop here? Look, it's hard to say, and I'm certainly not going to be the one who's going to try to pick the bottom. 3,800 sort of indicates, and big drops like 7% indicates that you're going to see a bounce in the short term. But the main issue is buy quality businesses. You get them at a discount. It's discount time sales in the stock market. Good time to put some money in. Don't spend all your cash, but certainly make sure you're in there, and we'll see. Take the long-term view. For any questions or query, give us a call or go to our website at growyourwealth.com.au. 3 minutes.